we want to continue the markets discussion and bring in Tom Essaye of the Sevens Report. And Tom, I'm just, it's a quiet day, admittedly, it's a quiet week, but a lot to think about for investors as we head into the new year. Just wondering what you're making of the rally that we've seen over the last 5-6 days here and what you're looking for in the new year.
Hi, Jared, and Happy New Year, everyone. Thank you for having me on. Typical year-end quiet trading for sure. I wouldn't read too much into this week's rally, honestly. I mean, there's very strong positive seasonals. There's nothing really, unless we get a total surprise from Omicron here in the next couple of days, that would really derail the drift higher into the end of the year. But here's the thing, don't let the strong finish fool you and make you think that 2022 is going to be another year of near 30% returns and almost no volatility. There is a major change coming next year, and it is that global central banks, not just the Fed, but global central banks, are removing accommodation, and they could do it pretty quickly. So we've got rate hikes and we've got tapering of QE coming, and that is going to mean more volatility, and we should all be prepared for that.
And then on the flip side of that, you see the PBOC injecting cash to help, shore up the economy at the end of the year. We all know that China's economy is slowing a little bit. And what impact do you think what happens over there affects us over here, particularly since we do have this news that Samsung's productions in China have been, their production schedules have changed due to this threat of Omicron that is spreading in one of their key industrial cities there?
Well, I think that China, the Chinese central bank essentially stimulating the economy is a general positive for global growth as we start 2022. What China does matters to the global economy, certainly, and the fact that we can get their economy kind of revving again, that's something positive for all risk assets. I don't expect that it's going to happen early in 2022, but we do think that China is a very interesting contrarian play for 2022, specifically something like KWEB or one of the other China-focused ETFs. More broadly, Omicron is really changing the game a bit on COVID. I mean, we are going to see cases absolutely skyrocket in this country here in the next week or two. I mean, we should easily double the previous high that we had of about 300,000 cases in the next couple of weeks. The issue there is, what does it do to supply chains and what does it do to inflation? To your point, if we all of a sudden have semiconductor chips, roofing again, essentially, then is that going to only further increase inflation and make the Fed more hawkish? These are a lot of things we got to think about when 2022 starts, although thankfully we get a few more days to relax.
And Tom, I promised the viewers I'd get into the bond market before, so I want to bring up the Wi-Fi Interactive. We have the 5-year T-note yield up about 5 basis points right now. And just on a technical basis, you could make the argument it's kind of broken to the upside right here just a little bit. Here's a 10-year T-note yield broken through this high from early December, and then the 30-year advancing as well within its trend channel. And all of this is pointing to an expanding yield curve, and we're seeing that value trade outperform today. I'm just wondering, so we're kind of discounting the moves in the equities markets. Do you see anything here in the bond market that we should be paying attention to, Tom?
Well, I think it's interesting that yields are a bit higher today. They're popping a bit. I think part of that was the fact that oil was higher on the inventory number, but we also have a lot of year-end positioning going on, right? So if we think about what's happened with bonds, especially in this recent fourth quarter, obviously you've seen bonds higher, yields lower, and what you can typically tend to see happen at the end of the year is people sort of close out those trades. Now, looking forward into 2022, if you're talking about a 10-year that's sub 1.5%, which is essentially just where we are right now, if you like yields there, then you have to be of the opinion that we are not going to see continued strong economic growth in 2022. That's definitely not consensus right now. And I think that if we are going to see better growth and we are going to see higher inflation, which is our opinion, then you are going to see yields rise. They're not going to rise as quickly as sort of everybody would expect because there are a lot of international influences. But at the same time, I would be a buyer of yields here. I still think we hit 2%. We would have hit 2% this year if not for Omicron. I think we can hit 2% in early 2022.
Yeah, everyone's waiting to see that when it happens. Look, you touched on some of the things that could go wrong in 2022. The Fed may have a big part to play in that. But what are some of the things that you think that will go right next year?
Sure. I think that essentially a continuation of what we have this year, right? Where a lot of the things we were worried about from a macro standpoint never actually happened. Earnings continued to get better and better. Earnings expectations continued to grow. I mean, one of the biggest takeaways from the whole pandemic is that corporate America is incredibly flexible and incredibly resilient. That's got to make everybody who owns U.S. stocks feel really good. I think that can continue in 2022. Additionally, if we could see inflation peak and begin to back off, that's a huge tailwind. It doesn't have to go down to 2%, but if we can just get it to back off, then that will let the Fed be a little more patient and it'll take pressure off of earnings. So really just a continuation of what we've seen. And then, of course, it certainly would be nice if this pandemic could finally burn itself out and we don't have to deal with wave after wave, variant after variant.
Yep, and I think QT also becomes a big question going into next year as well. All right, we will have to leave it there. Tom Essaye, founder and president of Sevens Report Research. Thank you so much for joining us today and wishing you a happy and healthy new year.